Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets closed.
Let's talk execution, let's talk speed. That crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance-based drawdown, standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights, let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match traders speed. Technology serving the traders need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning again, everybody. How are we all? Happy Monday. Hope you had a fantastic weekend. And of course, on the prop side that we're closing down, we are continuing to send out refunds and payouts to all eligible traders. As traders, as you all know, we are not paid for our time and our effort. We're paid for getting the trades right and hopefully paid for doing the right things. Not yet, as you know. It takes up to 30 days for us to process in chronological order. So once you've submitted your refund, we will get that processed. So don't worry whatsoever. But again, if you can't understand policies and terms, maybe this is the wrong game for you. And of course, I believe the more time you spend complaining and moaning about things, the less time you're going to be focusing on the right things that are going to get you funded again. All right, so hitting off the markets this week. Good morning to everybody. Hope you had a fantastic weekend. Now, let's dive right into the market. So last week we spoke about gold. We spoke about the S&P. We spoke about silver. We spoke about cryptocurrencies. And we even broke down the DXY and multiple other instruments, FX pairs, majors, and crosses. I wanted to start on the gold chart because this was the chart that we pretty much finished up on Friday. And we were poised with a particular scenario where the markets were ranging inside this bullish pennant wedge, and we had multiple different scenarios, two that we mapped out that were the consideration. Now, of course, from that, yes, there are three directions in a trade: up, down, sideways, so long, short, or range bound. From that, we have multiple variables. We have multiple breakouts to the upside, and we have multiple breakouts to the downside. And of course, we could invalidate the pattern and continue to trade from the right. Now, these live streams are for educational purposes only. They're not for signals, executions, guidance, nor advice. We may look at technical analysis that could provide confluences to your own ideas, but note, any executions that you do take are built off of your own analysis and your own edge. What we do here is purely for education. You know, what company? I'd love to answer that because it seems like you misunderstand and potentially are misusing a lot of words. What type of company are we? We are a strategical company that are closing down our prop arm and refunding and paying out every single trader that is applicable. We are returning client funds to the trader. It is not our fault if a trader has passed a single phase or a second phase or is now funded. If that trader has had a payout, great. If they haven't, they get a refund. If it took you a year to pass all of your phases to get to funded, that's not our fault. That's all on you. If you feel hard done by us returning your funds, please let us know, which again, you continue to do so. And if you don't want us to refund your funds, let us know. We will do what is right by the people. We could have just closed down the prop firm and said, we're not refunding any of you, but we haven't said that. We're closing down the prop firm so that we can focus on our ever-growing CFD broker that's licensed and regulated. We are refunding and returning client funds for all active traders. I don't see the problem in that. Businesses close all the time. When your local high street shops close down, something that you bought from them many years ago, if the batteries run out, you're not going to go home crying to your parents about it, are you? You're going to look at it logically. You're going to go, I bought this toy from this shop a year ago and the batteries have just run out. You are a scam. No. Start to think critically, because unfortunately it appears that trading is not for you. So feel free to continue spaffing your bullshit because unfortunately I think you've got complete misunderstanding and misuse of terminology because you are illiterate, unfortunately. Anyways, so we spoke about the probable scenarios on gold, and one of those probable scenarios was obviously looking for the breakout for the continuation to the upside. Now, as you can see in this chart, we had obviously that nice clean break to the upside, and we continued to push to the upside throughout the entire trading session. So post our live stream, we continued to push to the upside and we did it complete the extension quite nicely. So if we look at, you know, the expectation of the extension of this move, we were looking for an overall target of 5,043, which was tagged later in the trading session. As we come into pretty much Sunday's open, we hit that. Now, few considerations as a trader. One, if it's futures, before futures prop firms to start to limit your exposure and execution into those positions, you would have closed out at about 4:30 Central Eastern Time. If you were trading on CFDs, be it a personal account or a CFD prop account, you may well have held this into the close, realistically factoring in the government shutdown is no longer ongoing. The government is now fully open. We have non-farm payrolls announcements being released. We had lesser geopolitical tensions being released. We had a lot of data out last week that all of the bad news had already come out. So now we're just focusing on rumors, fading of the rhetoric, and trying to base our new positions on what's come out and actually looking at where the market wants to go. So overall, gold was really nice. You know, again, another live stream where we've called probable scenarios and expectations, and we broke them down, and we've tried to give you the ideas so that you can go on and fit that with your own edge, fit that with your narrative, and take away any informed decisions that you want to. So gold was an exceptional move, close on Friday. So again, nice bid up onto risk off. So, onto risk on. So people are starting to buy physical metals again, purchasing assets. Now, whether that is to pull us back into the higher time frame demand or the higher time frame supply that we were looking at, you know, on the 4 hour, which is this existing level, it's not personally something that I think it is. I think it's realistically going to start trying to trade higher into like 5,400s. But we don't, no, we're struggling on the levels, right? So we've got this high, this high, this low, was respecting this, but this leg, right? This leg hasn't taken anything out on the 4 hour. We go down into the 1 hour, we might be able to see if there's any intraday movements that we could potentially clean. And again, these charts are purely designed for you. These aren't charts that I trade off of because I only leave this analysis up so that we can actually call and review historical comments, because if we don't have the chart, we can't necessarily, unless we go through live recordings. Okay, so in the 1 hour, we still have this extreme. We've taken this pivotal point, we've taken this, we've traded through this, we're trading in this. So for me, 5,050 would realistically be an area where if we start to see a sign that the market is shifting to the low side, then I may consider getting short. At the moment, we're printing higher lows. Again, this is another pattern, look. So we have to identify these patterns. We don't trade the patterns, we just use them as confluence. So we've got a lot of volume inside here. So a lot of volume around here as well can be noted by the point of control that we're seeing. We're trading at somewhat of an extended level. So potentially we could deem this as support, a supply. I nearly said supply when I meant to say resistance. We could see this as resistance and supply, not support, not demand. We do obviously need to look at this pattern, and we need to factor in, okay, could there be probable breakdowns out of this? Could we fail and continue trading higher? Maybe. Or do we look for something like this and then continue to look for shorts And don't let my drawings guide you to believing that that's necessarily the take profit. If I am looking for anything, my first port of call will always be looking for my fixed RR, your 1 to 1.5s, your 1 to 1s, your 1 to 2s, whatever you trade. And then from there, we'll be looking at how do we manage this trade, manage the risk, and hold this position into into a structural point. Now, that structural point could be 4,650, which is this low. And the reason I point that low out is whilst we've taken out internal, this high is the move that really caused that push down. So that would be my first kind of major structural target to hold any balance of a position that I'm running. But realistically, sitting at about 1.5, 2, I'm quite happy with. And then we let that 10% run, that 10 to 15% run. The M30, I'm just seeing how the M30 looks. So equal highs on the M30, higher lows on the M30, potential rejections of the level at the moment, trying to close under the point of control. So again, we sit on our hands. It's Monday morning. It's 9:15. We could definitely wait for markets to develop more. From looking at gold last week, support sits at 4,500. I think, you know, when we look at what happened last week in gold and silver, they suffered their worst weekly decline in decades. You know, gold fell from $5,550 pretty much to 44.23s. Silver, again, highly correlated to gold, but the collapse in silver was even more severe. We saw a 50% drop from its peak value, which could have been specifically down to CME margin hikes because that would have forced liquidations. Overall, that would have just really extended sell-off. Yeah. You're probably right. 4,800. Interesting level on 4,800. I mean, I'm still seeing 45s as the big support level. 5,100 is longs. As long as we get that confirmation, right? We can't just say it's long. When people talk about levels, let's just say the comment here, 4,800 or below. 4,800 or below, or 5,150 and above, doesn't necessarily mean someone is going to get short or long. It just means they're the levels they want to see go before they consider looking for longs or consider looking for shorts. So for those of you that are new to the market, if someone says, I want longs from 5,100s or 5,150s and above, or I want shorts from 4,800s or below, don't just hit that level and trade blindly, because what we want to see is, first of all, we want to see 4,800 or below tapped. In this example that I'm using on the price that's been provided by Anthony, For me, I'm happy to be short anywhere above 4,800s into 4,500s. And I'm happy to be long 5,100s and above, or into 5,100s like we could have been from Friday. But the key is not just to get long or short something at a specific level. The key is to wait for price to trade into that level. And from those levels, they will then consider and look at how their edge is. What's the deciding confluences? Are there confirmations that are provided? Is there any extension on geopolitical risks or any fundamentals that we need to take into consideration? Or do we believe we've mitigated as much of the probable risk that we possibly can in order to take this trade both on a technical perspective and on a fundamental perspective? So if we want to break it into one complete sentence, is the fusion of analysis giving us the right probabilistic signals that we can take our trade and make the best informed decision? If it's a yes, from there we can get long or short. If it's a no, we sit on our hands. Does that make sense? Correct. And for those of you that were wondering whilst I was closing my eyes whilst I was talking, and it's because I don't need to have my eyes open in order to talk about analysis. If I'm talking about specific entries and executions on a chart, I can do it. I have to keep my eyes open. But when we're just talking, bearing in mind people always say, oh, I can do this with my eyes closed. Well, I can, and anyone can. If you've been in this game long enough, you know what you're doing, you know what you're talking about. You don't need to read scripts or rhymes or convert from AI chats and all of this rubbish. But something I like to always talk about is, I've been in this industry a long time, unprofessionally and professionally combined 2 decades. So for me, I've seen many cycles. I've experienced many horrific events. I've been involved in some very horrific events in terms of positioning in the markets. And I'm still looking at things and trying to be better. And I mean better in the sense of, when I started in the city, I went on the desk as a junior and wrote prices on the board and got people's breakfasts and got people's lunches and maybe did a bit of phone broking in the first month or two, just with clients that we knew, or answered the phones to specific clients so that I could facilitate the right people for them on my desk. And then I grew from there. But what I noticed in the last 5 to 7 years is more desks want STEM degrees. More desks want some form of quant modeling or data science or some form of coding ability, whether that be any of those 3 mentioned or 2 mentioned prior. And ever expanding regulations. I still take regulations to this day. I still focus on new exams, new guidelines, whether that be on the US side under FINRA or whether that be on the UK side under FCA. This game, if you want to be more than just a trader and you actually want to be something professional or institutional, you can't just be a good trader. You cannot just be a good trader. If you want to manage your own funds and manage your own money without regs, then you can do that. But you obviously need to be very careful. That's definitely not advice from my part. And there are places where you can go and get an umbrella license and trade under someone else's license as like a white label. But that will cost you minimum $5,000 a month. And short term, that's okay. But, do that for 10 years at the minimum. That's a lot of dosh. And you could probably be, you can put yourself in a better position if you're personally regulated and qualified to manage people's money. So yeah, I went off on a tangent there. But yeah, never stop evolving, never stop never stop learning. You know, you might think you know it all, but if you want to get into the professional world, and we're not just talking prop trading, we're talking professional side, you need regs and coding experience. So definitely sit down and start learning that. You don't even need to learn crazy things. You just need to learn the initial basics and fundamentals to be able to put that on your CV. And then from there, you can improve. So I guess we could say these live streams are now career advice as well, or career guidance, not advice. We can't use that dirty word because we're not regulated to give advice. All right, so gold we've touched upon, waiting for a break on this particular level. We'll see if prices break up or break down. From there, we can make a determining factor as to whether we see fit to continue in the direction of the trend. At this moment, the way this pattern is, unless we trade out to the top side, this looks very toppy to me. So I'd be expecting a break of that 5,020 level to trade into 5,000. If we can break and stay below 5,000, then I'll be looking for confluences to get short. If we hold above 5,100, then I'll be looking at how price wants to trade higher, and I'll be looking to get involved on that one too. Let's go across to my favorite indice, the US 500. So we didn't look at this instrument again on Friday. Again, we're very, very busy over at Seacrest. With the closure of the prop arm, we have all hands on deck to refund any active traders or facilitate any funded trader payouts that are applicable and viable. So it's all hands on decks. A lot of people, a lot of workings, even though we have automations. Very busy. So price did actually trade up quite aggressively into that area that we were talking about that could be deemed as a potential area of resistance, which we did have a rejection of that level, but quite frankly, that level got blown through and became very quickly invalidated, but it became a point of support before trading higher. So you can see we had the rejection of the level, we then traded through, them areas then became support and we traded higher. And that happened, you know, pretty much the whole session. So if we look at how that support blew through, so during our live stream, we were talking about this support, bloody hell, this supply level. I'm so tired. This supply level, we traded through that level. We've retested that area. That area of resistance has now come demand. So 6,800 is a good area to start considering buying. It doesn't mean you get long, but there are multiple reasons and ways that you can get long from here if you want to. You know, for me, again, I didn't trade on Friday. We're just far too busy. So my 1-to-1s there, my 1.5. Had I have wanted to trade into the 4:30 US close, oh, excuse me, I'm just looking. So realistically, I would have closed this position out about here. I never hold into the close. I always close 1 to 2 hours before. And on a Friday in particular, I can't be bothered. On a Friday, I just want to get out of the office. I want to spend the time with my girls. I want to relax. And usually if we've got clients that need entertaining, then that's a good night to do that as well. So, yeah, Fridays, you just want to be out of the markets unless you're going to hold weekend risk, which at the moment there is no way to effectively hold weekend risk. So on this occasion, you could have held it. You know, it did gap up, yeah, but there's no point. Why? If you're making, you know, 1.5, 2 hour a trade and your strike rate's good, your sharp ratio's good, your Sortina's good, and you're actually a good trader, which is quite difficult, then close out for the weekend, take your fun coupons and go and enjoy your weekend. But whether you trade Mondays or Fridays is going to be completely subjective to you. All right, so what are we looking at? All right, so market gapped up. We're looking to close the gap, which we've done. We have a ascending channel that we're trading inside. The way this ascending channel looks, and based on the way that it entered the direction, which is bullish, the general expectation is for price to continue in the direction of trend. Now, where that will obviously break from, it's completely, you know, unbeknownst to ourselves. It could break from here. Still, our target would be about 7,060. What we do have to factor in is around that 7,000 level. We have obviously a big area of resistance, a big area of supply that could challenge price. Now, we've seen 2 prior blowouts from those levels. Could we get a third? That's a question that I can't answer, but let's provide some educational pieces on that. The more times a level is tested, the weaker it becomes. There are going to be people that are defending that 7,000 level that want to get short, right? And the older days saying is a trend line, a trend line needs to have 3 touches to be a confirmed trend, or 2 touches to be a confirmed trend, and you trade off the third. But remember, the more times price touches a level, the weaker it becomes, because the less people are going to be buying and the less people are going to be defending that level the longer it goes on. So that's why, from a trend perspective, when people talk about buying trend lines or selling trend lines from a technical perspective, that's why they still fail. And it's because they're trying to call the bottom, the top, or the reversal of a move. Whereas you can be proactive to levels, you then have to wait for your confirmations and confluences to react to a trade idea. And that's why we were discussing a bit earlier that levels and price points are just confirmations of interest of where we may be interested to get long or short from. It's the same with this scenario. So I'd be quite interested to look for longs if we broke this bullish channel, right? But it doesn't mean I'm going to. And it also doesn't mean if the risk to reward ratios are not that great, then I'm probably not going to. Like from 69.37s into 7,000s, okay, I could probably get a 1-to-1. And knowing that 7,000 has been tested multiple times, this could be the bullish move that we need to trade into 7,100s. So we have to look at it from a, does the risk to reward stack up? How do we view the overall economic outlook? Donald Trump came out on Friday also and said, get ready for the biggest bull market you have ever experienced, which, you know, there's a lot of comments out, there's a lot of noise. So you just need to wait for the market to show its price point that you're interested in, and then we need to trade off of those once you get our defined confluence levels, whether that be trading through us here at Seacrest Markets or whether that be trading personal or prop accounts elsewhere. But yeah, I don't see anything else really on the S&P. I mean, like we had these moves all the way up. Look, this is what we were talking about. We either get a break like this and we continue higher, which we did, or we get a reaction from this and we start breaking down, which we didn't. So that's the reason you always kind of look at the markets and try to identify what's going on, because this way you stay informed and you're less biased to a particular direction of the market. Now, this is the scenario, like right where we are right now, right? You know, we're making lower lows on the swings, but we're starting to show that potentially we're going to try to print a higher high. It doesn't necessarily mean that we don't get a cup and handle round the top and we start trading lower. Just because we're in a bearish ascending trend line or a bearish and equidistant channel, it doesn't necessarily mean that that bearish equidistant channel is going to trade bearish to the downside. It's actually almost a bullish flag, but it's a bearish retrace on that. This potentially could either break either way. You know, it's 50-50 on that in terms of without taking into consideration the invalidation of the sideways point. Wow. Training took it out of me this morning. So S&P waiting for further guidance, could get long off of this, about 69.40 get long. It's not a bad level, really. Not a bad level at all. Let's take a look at the DXY and then I'll go into silver. So I'll go from instrument to asset class. Let's take a look at what happened last week. So obviously end of January, we bounced off of that level. We kind of traded up last week. We rounded. You know, what did we do? We came into that previous area of support, which turned resistance. So clearly those buyers or those sellers at that level have stepped back in. The calls that we made last week all panned out to the upside, traded in. Where could price be heading now? Could be heading back down into 96s. I mean, overall, we're bearish on this, right? Oh, my neck's hurting. I need to turn this way. So on Thursday, we took the high. We then traded lower throughout the session into Friday. By Friday midday, we took this structural low, which obviously caused these highs to fail. So from here, if we get a nice pullback into like this level, which we didn't get because it didn't mitigate, if we believed that this was the sell-off, which again on a Sunday, are you going to be trading maybe at 11:15? I'm not. I tend to watch the open and just see where the market's kind of positioning itself, but I won't hold most positions. Sell off into the new open session overnight. Nothing done really, guys. It's pretty clean. Like our analysis is pretty much still playing out from Friday. If I was to look at where the 4 hours going now that we've taken this out, we could get a small pullback and continue to the downside. Again, higher time frames are showing a pullback into higher levels, so they probably want 100 level. We're just selling off from resistance, so until we base, we've got a base here at demand. A lot of areas of potential support and resistance at this moment in time. So yeah, nothing done really in DXY. Did I say silver? I can't remember, but yeah, in DXY. Silver's trying to recover. Obviously, that key area of 77, we traded out of it. We're now trading into the 81s of that level, trying to recover. We've got a point of supply sitting up around 86s, 87s. No real major sell-off from internal structure on that previous left. Obviously, we just had a huge push to the downside. So could just be a purely overextension on the back of these CME margins. and of course the general geopolitics that we saw last week, government shutdown, non-farm payrolls, etc., etc., etc. So overall quiet. I'd like to see the next few days pan out. Tuesday, Wednesday really start to show up. US session will give us some volume. So nothing really done for me so far. If we get something about 10 o'clock, well, I can't even say timings because I don't trade necessarily off times. If a market shows me something, then I'm going to wait to see it. But I want to see the volume kind of develop out. It's the first trading session of the week. And the market's giving us potential corrective price action. So, again, nothing really done. So markets are quiet at the moment. So this is pretty much the whole live stream I've covered. Does anyone want to ask any questions at all? I'll just wait. Look, there's quite a few of you in here. If you do have questions, I'll give you a couple of minutes. I'm just going to check some few other things and I'll come back to the stream. But I'm still here. I'm still live. Just ask any questions you've got. Good question. It's just baked into me, really, Anthony. You know, it's part of kind of like my family heritage. I'm surrounded by finance. My brother-in-laws are in the markets. Everything investing just excites me. There are other passions I've got, like golf. But generally, I think where I've just been doing it so long as well, it's just baked into me. Yeah, I don't have that answer, and without getting too cheesy and cliche, like people always say they love trading. I've never. Well, I said it early on, but I've also had a different route to the market. I've seen the desks, I've seen what it's like, and it's all I know. So everything finance just is like, it's just insane. It excites me. It's stressful, but it excites me all the time. I think I just can't. I think the easier question is, why haven't I fell out of love with it, rather than why I love it so much. I fall in and out of love with it a lot at the moment. I'm finding. I guess it depends on what your main reasons were. Most people, again, I'm not speaking to you directly on this, but I'm more kind of giving an open-ended answer. Most people get into trading because they want to be rich. They think it's an esoteric lifestyle that gets them rich quickly. So it's quite easy for them to fall out of love with it. I'm not saying this is you. But it's quite easy for those people to fall out of love with it because they only got in it for the money. Whereas if you really love numbers and you love finance and you love all things financial markets, then it's a lot easier to stay in it when it's, whether it's tough, whether it's easy. And I'm quite long in the tooth. So I didn't necessarily get in it just for the money. I got in it because I loved finance. I loved economics. I loved the markets. I love numbers. So that's why I've always loved it. Am I the best at it? I'm sure I'm probably not. You know, did I make mistakes early on in my career? Massively. I should have never left the city when I think it. Like, sometimes I sit there and I say to myself, I should have never left the city. And I left the city because one of my seniors at the time went to set up a merchant bank. And that's when I went into proper prop. And there's some days where I sit here and I think I should have never left. But we've all made mistakes. I'm still involved very much in the financial markets, massively. My whole life, every day is markets. And I often think about what is there in the markets that hasn't really been achieved or hasn't really been served. Because everyone talks about how much they love trading, right? Trading is boring. Pulling the trigger on an investment is boring. Yeah, listen, it's always a driving factor. So I had an associate friend of mine many years ago, and their father was at BAML at the time. And it's definitely a driving factor to know that if you do what you love and you get paid a lot for it, that's a fantastic byproduct. And luckily I chose an industry where, you know, the average salary is a lot higher than the median average of the UK. But I also see myself as a little bit of a different breed. I'm a bit of a strange character. And that's okay. Yeah. So, and the point is, you fell in love with the analytical and psychological side of financial markets, but now you've achieved it. So you've got to potentially dig deeper to understand your rhymes, your reasons, the whys, the finer things as to why you're doing it now. And if you can't find them, to you don't need to you've also got to remember that you don't need to love it to trade. You don't need to love it to invest, and you don't need to love it to make money. You might find more purpose outside of that in voluntary roles or in other areas that actually give back to humanity. You might find that you prefer another area that could inherently benefit the financial markets or financial services industry that isn't directly trading, but you could still do both. Because, and again, not necessarily aiming at this at any one of you, but if you're a very good trader that makes lots of money and you know the way you trade, let's say you're a swing trader, there's nothing stopping you going out and becoming a golf professional. You could go out and practice golf between children at school, having your children at school. You could become a PT and coach people how to become high rocks professionals, or make them the strongest, fittest human selves that they want to be. Being a good trader and making lots of money doesn't necessarily mean you need to love the market. I guess that's a good point to factor in. If you've achieved everything you've wanted to, and you fell in love with it because of the analytical side and the psychological side, what's really keeping you in it now if you've achieved it? And that's probably why you fall out of love with it all of the time and come back. the money keeps coming, the money keeps pulling you back because obviously you're making money, but everything else you've achieved. So unless you find and dig deep to find new areas as to why you like the financial market so much, you're going to keep drifting in and out of it. You know, it's the same with anything. It's like so many people focus on the end result, which is achieving financial freedom or achieving analytical prowess of, you know, a massively experienced individual, or they've achieved their psychological levels that they wanted to, that they fail to realize that the entire process was the best ever thing they could do, because once you've achieved it, you've conquered it, as they say. They, like, not me, but it's like if you want to become a golf professional and all of a sudden you're playing off scratch, or you become a grandmaster in chess, or you become an exceptional tennis player, or you get the best physique you've ever got. Once you've got the physique, or once you become the scratch golfer, or once you become the grandmaster, if that was always your goal, what do you do from there? You either sit down and have a deep talk to yourself and realize that getting to pro or getting to grandmaster was only the first stage. From there, what do you want to do? Do you want to go on to challenge people in grandmaster challenge test chess tournaments, or do you want to go and compete in pro AM tours on golf? Do you want to try and get your do you want to go and get your PGA card? You know, so there's so many different things from, like, once you become a consistently profitable trader, that's the first part. The next part is, how do I keep it? How do I stay in the game as long as possible? And how do I get to that next level? And what do I need to do to get to that next level? So if you're a good trader that's got a track record, what can you do? Go get regulated. Once you're regulated, set up a family office or a fund. And of course, go and employ the right people. And what I mean by employing the right people, I mean go and get the right LPs, the right counsel, and then go and build out a regulated license fund. Go and raise 100 million, which 100 million just keeps the lights on if you're a professional fund. Yeah, we'll meet up in London, Anthony. Travel down or travel up, and we'll meet in London. So yeah, so, you know, there's so many things. Once you've hit a level, either that's your ceiling or that's your floor. So if it's your ceiling, then that's why you keep falling in and out of love with it. And if it's your floor that once was your ceiling, you just realize it's now time to take it to the next level. Any other questions? And enjoy your holiday. If not, and there's no other questions, you know, just remember what I've said. $80 is the floor in silver. We're waiting for gold to potentially show us a breakout that we could potentially consider looking for next ideas. And same for the US. Same for the S&P 500. So on silver, we're starting to, on gold. On gold, we're starting to break out to the downside. So we then wait to see what's going to happen. Again, it's broken to the downside. And then for the S&P, we broke out and now we've traded back in. So we're waiting for the next area of confirmation to whether we get long or short, whether we get long the S&P, short gold, whether we get short the S&P and long gold. But other than that, I'm going to wrap up. If there's no further questions, if there aren't, again, remember, I'm here Monday through Friday, same time, Monday through Friday, hosted by none other than myself. If you haven't opened up a CFD brokerage account with Seacrest Markets, please feel free. Obviously, we'd love to have you trading with us. Competitive spreads, leverage up to 1 to 500, and 100% deposit bonus up to $500 is currently active, and you can trade obviously multiple instruments. But have an exceptional week. I'm here tomorrow. As always, trade safe, trade smart, trade Seacrest, and I'll see you tomorrow.
Emerging psychology's key. Discipline strong, no greed in the spree. Risk managed tight,